Hey everyone, Michael here from Michael Visa Guide, and today I've got something that could literally put thousands of dollars back in your pocket if you're 65 or older. I'm talking about a brand new IRS rule that almost nobody seems to know about yet, and honestly, I'm shocked it's not getting more attention. If you're a senior or you have parents or grandparents who are retired, you need to hear this because we're talking about real money, real savings, and a real opportunity that's only going to be available for the next 4 years. So let me ask you this. Is there actually a new way for seniors to save big on their taxes? And I'm here to tell you, yes, absolutely yes. But this isn't just some minor adjustment to the tax code that happens every year. We're talking about a fundamental shift in how the federal government looks at your retirement income. And if you miss this, you could be leaving thousands of dollars on the table that should rightfully stay in your account. Now I want you to pay very close attention to this number, $12,000. That's right, 12 grand. That's the potential new bonus deduction available to a married couple where both spouses are 65 or older filing jointly. If you're filing as a single person, you're still looking at $6,000. And let me be clear, this is not some gimmick or too good to be true scheme. This is legitimate money that can stay in your bank account instead of going to the IRS. So, what exactly are we dealing with here? The official name is the Senior Bonus Deduction, and it's a temporary additional deduction specifically created for taxpayers aged 65 and up. It came as part of a larger package of tax reforms designed to provide financial relief to older Americans. Now, here's what makes this absolutely powerful, and I really need you to understand this part. It stacks. This bonus deduction doesn't replace anything you're currently getting. It gets added on top of your regular standard deduction, and it's also added on top of that extra deduction you already received just for being over 65. Think of it like building blocks, one on top of the other, creating a massive shield against federal taxes. All right, let's get into the real numbers because this is where it gets exciting. For a single person 65 or older in the 2025 tax year, the standard deduction is projected to be around $15,750. Because you're over 65, you already get an additional $2,000 deduction. But now you add this new $6,000 senior bonus on top of that. Add it all together and you're looking at a total deduction of $23,750. Almost $24,000 of your income completely protected from federal taxes before you owe a single penny. But wait, because for married couples where both of you are 65 or older, the numbers get even more impressive. The standard deduction for filing jointly is $29,200. Since both of you are over 65, you each get that extra age-based deduction totaling $3,200. Then you add the $12,000 senior bonus, that's $6,000 for each spouse, on top of everything else. Suddenly you're protecting over $44,000 of your income from federal taxes. Let me say that one more time so it really sinks in. $44,400. For anyone trying to stretch their retirement savings, that is absolutely massive. And here's something that makes this different from almost any other tax benefit out there. It works whether you itemize your deductions or take the standard deduction. Usually the tax code forces you to pick one path and stick with it. But this one? It applies no matter which route you choose. If you prefer keeping things simple with the standard deduction, you get this benefit. If you meticulously itemize every expense, you still get it. That kind of flexibility is incredibly rare. Now, of course, with any government program, there's always fine print, right? So let's talk about the limitations, who qualifies, and critically important, for how long. This is where you really need to pay attention to maximize your advantage. And this timeline might be the most important thing I tell you today. This is not a permanent change. Let me repeat that because it's crucial. This deduction is temporary. It only applies to tax years 2025, 2026, 2027, and 2028. That's it. You have a 4-year window to benefit from this. Unless Congress decides to extend it, and there's no guarantee they will, this extra deduction vanishes after you file your 2028 taxes. So you need to be thinking about this right now and planning any major financial decisions with this 4-year clock ticking. The other major piece of fine print involves your income. This benefit was designed primarily to help low and middle income seniors, so there are income limits that determine your eligibility for the full amount. This works through what's called a phase-out. Here are the numbers you need to know. If you're a single filer, the deduction starts to decrease once your income hits $75,000, and it disappears completely at $175,000. For married couples filing jointly, the phase-out begins at $150,000 and ends at $250,000. You absolutely need to know where your income falls relative to these thresholds. So how does this phase-out actually work? There's a specific formula, and it's pretty straightforward. For every $1,000 you earn above those income thresholds, your bonus deduction gets reduced by $60. What this means is even if you're in that phase-out range, you don't necessarily get nothing. Every dollar of the deduction you can still claim is money back in your pocket. You just won't get the full $6,000 or $12,000 amount. All right, so you know what it is. You know who qualifies. Now for the most critical part, how do you actually claim it? The good news is, the process isn't nearly as complicated as you might fear, but you do need to follow the right steps. A lot of people hear about new deductions and assume they're automatic. They're not. You have to actively claim this benefit. Here's your simple 3-step guide. First, when you file your 2025 taxes, which you'll be doing in early 2026, use Form 1040-SR. That's the form specifically designed for seniors with larger print and clearer instructions, much easier to read. Second, on that form there's a box you need to check indicating you're 65 or older. That little check mark triggers everything. And third, you'll need to complete a brand new form called Schedule 1A. That's where you'll specifically calculate your bonus deduction. Now let me address something that's causing massive confusion out there. I keep hearing this rumor going around that this new deduction completely eliminates all taxes on Social Security benefits. So is that true? Let me clear this up right now because getting this wrong could lead to some really costly financial mistakes. The answer is no, that rumor is false. This deduction does not directly eliminate taxes on your Social Security benefits. The rules for how Social Security gets taxed remain the same. What this deduction does do is lower your overall taxable income. And by lowering your taxable income, it might indirectly reduce how much of your Social Security becomes subject to tax. But it's not a magic wand that makes everything tax-free. That said, for many retirees with more modest incomes, the practical effect of all these deductions combined could result in a zero federal tax bill, which is pretty incredible. Let's bring this all together and talk about why this truly matters for your retirement. This isn't just some abstract accounting maneuver. This is a real policy designed to address real financial pressures that millions of seniors are facing every single day. So, what does this mean in actual dollars and cents? Well, that $6,000 deduction isn't just a number on paper. If you're in, say, the 22% federal tax bracket, that $6,000 deduction saves you about $1,320 in actual taxes you don't have to pay. That's cold hard cash you can use for prescriptions, Medicare premiums, unexpected car repairs, or anything else that comes up. For anyone living on a fixed income, that kind of relief is genuinely meaningful. If you take away nothing else from this video, remember these key points. First, you must be 65 or older to qualify. Second, this is available even if you're still working part-time, as long as your income stays within the limits. Third, it works whether you itemize or take the standard deduction. Fourth, watch out for those income phase-out limits. And fifth, most importantly, remember this is temporary. It only runs from 2025 through 2028. I want to leave you with this final thought. Please don't leave money on the table just because you didn't fully understand how this works or because it seemed too overwhelming. This benefit was specifically created to help seniors like you. Start planning now, get your documents organized, and make absolutely certain you're claiming every single dollar you're entitled to. And one final critical warning. Be very careful out there. I guarantee scammers are already popping up everywhere trying to charge people money to help them claim this deduction. You do not need to pay anyone a single cent. All the information and forms are available completely free from the IRS, and any reputable tax software will handle the calculations automatically. Please be smart and don't fall for these scams. So here's my question for you. This is a 4-year window of opportunity. a window that's currently set to close after 2028. It requires strategic thinking about your retirement income over the next few years. Knowing this huge benefit has an expiration date, what's your plan to make the absolute most of it while you can? Drop your thoughts in the comments below. And if you found this valuable, do me a favor and hit that like button and subscribe to Michael Visa Guide so you don't miss future updates that could save you money. I'm Michael, and I'll see you in the next one.